Hello, my name is Dr. Ricky Keys and welcome to my memorial. Of all the issues that I've done research on, the most important is your credit score. And the reason why this issue is important to me is because your credit score has the ability to impact you in so many different ways. Based on your credit score, you can determine how much you will pay in terms of accessing credit, whether you will even get credit. It could determine whether or not you get a job or don't get a job. It could determine whether you get insurance. Obviously, insurance is a big issue for us because that's what my memorial was specifically designed for, making sure that you're able to get the appropriate amount of life insurance and other forms of insurance. That's why I feel that it's important to talk about credit scores. The other issue is, have you ever felt at times that before you even got started with a process that it was doomed? You were doomed for failure. There was no chance that you were going to succeed. This is kind of the situation with your credit score. There are people who are often impacted by their credit score and they don't have a way of getting out of that situation. That's why I believe that credit scoring agencies often assign an unconscionable and unfair regressive tax on the poor and the less educated. And I have the data to prove it. Before I get started on providing my evidence, let me just tell you a little bit about credit scores. There are three major credit bureaus in the United States. They're Experian, Equifax, and TransUnion. Each of these organizations have their own way of calculating what a credit score is. They use a sophisticated algorithm to make a determination as to what number your credit score should be. Generally, they use 5 specific things to make the determination of what your credit score should be. That includes your credit history, your credit utilization, the length of credit that you have, the new credit that you have, and the credit mix. Let me briefly go over all 5 of these things and tell you exactly what they mean and how it impacts you. Your payment history represents about 35% of your credit score. Obviously, because this is the highest number, this is the most important factor as it relates to what your credit score is. Your payment history tells potential creditors how you paid in the past. In other words, if you had a credit card or if you had a car or if you had some other form of credit, what it does is it tells them that you've been either late or that you paid that credit on time or that you've been somewhere in the middle. So it's important to get credit, but most importantly, to pay that credit on time. The second factor is credit utilization. Now, this is an important one, and this is a very tricky one because credit utilization basically refers to the amount of credit that you actually use. So if you have a credit card and if you use 60 or 70 or 80% of the available balance, what the credit agencies are going to do is they're going to say that you are a credit risk. The optimal number is about 35%. So if you have 4 or 5 or even 1 credit card, the most important thing that you could do is keep the utilization below 35%. In essence, you use 35% and you don't use 65%. The next factor is length of credit. This represents 15% of your credit score. Length of credit refers to the amount of time that you've had this credit. So if you've had a credit card for 10 years, what it tells your potential creditors is that you have a long history of actually making positive payments. So it's important to have credit, and it's also very important to have long credit. So if you had the option of doing away with a credit card and you were considering 2 credit cards, one that you had for 2 years and one that you've had for 10 years, it would be obvious that the one that you would get rid of is the one that you've had for the shortest period of time. The next issue is new credit. Your credit score can be impacted if you had a creditor to actually inquire about your credit score or your credit history. It also refers to the new credit that you get. So if you already have 5 credit cards and you get another credit card, then it will tell potential creditors that maybe you're a credit risk. This accounts for about 10% of your credit score. The last factor is your credit mix. Now, credit mix refers to the kind of credit that you have, whether you have a credit card, which is a revolving credit, or if you have an installment loan, or if you have a car loan, or if you have a home loan. What creditors want to see is that you have more installment loans and less revolving credit. This accounts for about 10% of your credit score. Now, let's look at the proof that I have. I've done extensive research, as I said, and what I do is I don't believe in having a lot of words. I believe that, as the old saying goes, a picture is worth 1,000 words. So what I've done is I've developed maps that show the impact of your credit score and other factors by state. Now, I also have this data by county, by city, by zip code. So the objective is to show you specific the impact of credit scores in your state. This first slide shows the average credit score by state. It shows that there are states that have low credit scores. Those are the states in green, and it progressively goes from green to yellow to orange and to red. This slide is from lowest to highest. So the green represents states that have low credit scores. The yellow and the orange are basically in the middle ground. And then the red represents states that have high credit scores. As I said, I believe that credit scores are an unconscionable tax on the poor, and it's designed to keep the poor poor. What I will show you is a correlation between credit scores and poverty, and also delve a little bit deeper into the impact of credit scores on specific demographic populations. This next slide shows a percentage of the population that has declining credit scores. Again, it goes from green to red, lower to higher. This next slide shows the percent of the population by state that has improving credit scores. As you can clearly see, those states that are in green, which are states in the southern part of the United States, have credit scores that are not improving as high as those states that are in the northern part of the United States. What we'll show you in a minute is that critical state map that shows the relationship between poverty and credit scores. This next slide shows the percent of the population with prime credit scores. Now, a prime credit score reflects a good credit score. So on average, a 720 is a prime credit score. Anything less than that is considered subprime. This next slide shows the percent of consumers by state who actually pay their credit on time. Now, this is the slide that I've been waiting for. This is a slide that shows the percent of the population that lives in poverty. It goes consecutively from red to orange to yellow and then to green. There's a clear correlation between this slide and all the other slides that I've shown you. The states that have higher rates of poverty are also those states that have lower average credit scores, populations with declining credit scores, a smaller number of the population who have improving credit scores, consumers who have subprime credit, and consumers who don't pay their credit on time. Now, I want you to understand this is not a racial issue, but as you know, there's a higher percentage of the African American and Hispanic community who live in poverty. So this slide shows the average credit score of a home buyer by race and the percent of buyers with credit scores that are less than 620. As you can see, the average credit score for Asians is 740. The average credit score for African Americans is 677. The average credit score for Hispanic whites is 701, and the average credit score for whites is 734. And then if you aggregate all the other populations, their average credit score is 732. The average credit score for the entire United States is 728. Now, let's look at the further right column. The further right column shows the percent of the population by race that has a credit score that is less than 620. So only 2.6% of the population of Asians have a credit score that is less than 620. More than 1 in 5 African Americans have a credit score that is less than 620. 11.2% of Hispanics have a credit score that is less than 620. Only 5.4% of whites have a credit score that is less than 620. Only 6.3% of others have a credit score that is less than 620. And finally, the average is 6.8%. The Federal Trade Commission said that 22% of all Americans had some form of error on their credit report. And the important thing is that you know how to dispute these errors. Given that important caveat, we also know that education plays a role in whether you live in poverty or not. This slide shows that people with less than a high school diploma had more errors on their credit report. People who had some college, a bachelor's degree, and some graduate school education, they had a significantly lower amount of errors on their credit report. It's also important to know that those errors had a significant impact on the person's credit score. Now, as you can see, I think I've laid out this situation really clearly. Credit is significant, and I believe that it is an unfair, unconscionable tax on the poor and the less educated. Now, I've laid out the problem. Here's the solution. The first thing that you must do is to go to annualcreditreport.com and get a copy of your credit report. Once you've done this, you need to look at your credit report and make sure that it's you, that every entry that's on that credit report is based on credit that you've actually gotten, that the payments are right. You need to do all of that very meticulously. And once you've done that, if you identify errors, we have a credit dispute tool that will enable you to address any error that you have on your credit report. So please feel free to use the tool. My name is Dr. Ricky Keys with My Memorial, and we'll see you next time. Wait, don't forget to like, share, and comment on this video.